This is Jim Juback, and welcome to my Juback Asset Management YouTube video for November, 14th. Okay, we're in Venice, and we've returned to Venice from Sicily, and I'm just happy to report, this is my news for the week, that the seagulls haven't forgotten me, and I had breakfast with one this morning in Italian Gabbiano, or in Venetian, cow cow. Interesting that Italian and Venetian in this particular case are so very far apart. Anyway, if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we're doing our next video. Trying to do about 3 a week. We're back in the saddle, it seems. If you want more of my stuff, you can go to my free site. That's jubackpicks.com. That's got 3 portfolios. If you sign up, you'll sign up for free. You'll also get end of the day alerts and access to those portfolios. All that's for free, and you can sign up on the site. Also, if you want more of my stuff, 6 portfolios instead of 3. So besides the dividend, 12 to 18 month and 5-year on Juback Picks, on jubackam.com, my subscription site, you also get a volatility portfolio, a really long-term portfolio, which I call the millennial portfolio, and an ETF portfolio. Okay, so all those are links down below, and please feel free to roam around. Okay, so today's topic is Fed one and done in December. Now, today we're on the 13th, the government came out with CPI inflation numbers that showed inflation ticking up just a little bit again, but not enough for the market to be convinced that the Fed is not going to cut rates again in December at its December 18th meeting. I think that's probably true. The Fedwatch tool says 83% odds. I'd say that's maybe a little low, but I think it's almost certain that the Fed will do this. The Fed has been signaling really hard that it's going to continue to cut rates, but the December 18th meeting comes with a dot plot, which is the update of the Fed's projection of where rates are going to be and what inflation is going to be, et cetera, et cetera. This would be a perfect time for the Fed to say, hey, the outlook for 2025 is more uncertain. We're going to take a pause. And I think that pause is going to wind up being a decision not to change rates at all, certainly not to lower them in 2025. So I think December is the end of the road for this round of rate cuts. And why? Because uncertainty in 2025 is going to tick up really, really big. You've got 3 major economic, monetary, fiscal policy initiatives from the incoming Bush administration. And Susie Wiles, who's the incoming chief of staff, has made it in the White House, has made it very clear that her take is do it now, because if you don't do it in the first 2 years, you don't get it done. So I think this is really, really going to happen. My adamancy has nothing to do with whether I think this is good policy or bad. I'm simply trying to read the politics and trying to read how that's going to affect the markets. 3 things we're looking at is basically a renewal of the 2017 Trump tax cuts. So a huge tax cut going forward. We're talking about tariffs of anywhere from 20 to 200%. The president-elect was very, very, vague on the stump. And the last is mass deportation of somewhere around 11 million illegal and potentially legal immigrants, depending on whether Stephen Miller gets his say or not. All these things are wildly disruptive. So I think what the Fed is looking at is a massively stimulative effect from the tax cuts. So that's going to pump up growth, pump up inflation. You're looking at a potentially wildly harmful effect on economic growth from the tariffs. People have said this is going to cut GDP growth by anywhere from 1 percentage point to 2.5 percentage points annually. And it will also, at the same time as it's cutting growth, it will also drive up in prices because, hey, those tariffs are going to get, despite what President-elect Trump believes, tariffs will be passed on to the consumer by the corporations. The companies are not going to pay it. China and Europe are not going to pay it. Consumers are going to pay it higher prices. Okay, so that's higher inflation. And the last one is if this effort to deport 11 million immigrants goes through, we're going to see really wild disruption in supply chains, labor shortages, all that is going to push prices up. So what we're seeing is, at the same time as we're going to see wildly stimulative effects from the tax cuts in an economy which is already running pretty full speed, you're going to see a downward effect from the tariffs. You're going to see probably a downward effect on growth from the tariffs. You're going to see a downward effect on growth from the deportations. But both those are also going to produce inflationary pressures on the upside. So what you're going to see on balance is a lot of inflation pressure. Now, does the Fed know how any of this is going to work out or what the schedule for this is? No. But I think what the Fed will say in December when it does the dot plot update is saying, hey, we don't know. All this stuff is really out there. It's going to have big effects. And what we'd really like to do is to sit back and wait a little bit and see how it starts to play out, see what some of the numbers look like. There won't be any numbers that are meaningful on this until middle or 2/3 of the way through 2025. So I think the pause, if it happens, it's just a pause, is going to be a long one. If it's more than just a pause, because the effects of this are actually as big as I think they're going to be. So we're looking at all of 2025 as being no action, because the Fed is trying to figure out what to do about these very, very big effects, which don't cancel each other out. So that's why I say one and done in December, how the financial markets will behave on this, because right now the financial markets are basically saying, hey, this is all good news. Well, it's not. So let's be careful out there. This has been Jim Juback. If you like this video, please give it a thumbs up on YouTube and subscribe to my YouTube channel. That way you get notification of when we do the next one. All that's free. If you want more free stuff, you can go to my jubackpicks.com site. That's got a couple posts a day, 3 portfolios for 12, 18 month, 5 years, and dividends. That's free. You can go to the site and sign up to get alerts every day. Also, or you want even more of my stuff, that's 6 portfolios instead of 3. More posts a day. You can go to my subscription site. That's jubackam.com. All those links are down below. Thanks very much for watching.